Jay's Click Weekly Reflections. On this episode, I'm going to basically analyze a whole market. So, how I usually do it, how I usually see the market, how I analyze it, and how I base my entry or rather execute regards to my analysis or according to what I've viewed from the analysis. So on the executions or rather the recaps that I usually do, the trade recaps, so most of them I usually capture the entry time frame. Now after all of these analysis has taken in place, so I usually capture the entry time frame because it's easier that way, since I don't record myself talking. So usually I just time lapse the process, the event of the trade execution, basically to act as an evidence on regards to the executions that I've taken. So personally they are my personally they are my okay, or I'm trying to look for this word. So they are they help me on the reflections, for one, to reflect on what I've done during the course of the week. Then once I look at the videos, I look at the executions, I'm able to note out whether I was in line with the analysis or not, then what I'm going to change on my next execution. So they really help me a lot in my next analysis during the weekends when I'm analyzing the market, trying to see where the next opportunity lies in. So first I usually check the activity of the week, how my executions were, how I executed them. I look at them, I analyze them, see maybe where emotions took over, see where maybe I messed in one way or another, then what I can change on the coming week. So they're usually very helpful, so that's why I usually capture only the time lapse of it. But on this episode of the weekly reflections, I'm going to try and capture everything, how I usually analyze it, how I face the market, and what lies into me in executing the executions that I usually take. So to beginning with, all along before I've just been analyzing markets using the higher time frame, looking for trends, basically higher high, higher lows, looking for uptrends and downtrends, and how I can again come and join on the evolving trend or on the current trend that's running. So basically, if it's an uptrend like we have right here, an uptrend, once I see an uptrend happen, I usually wait for the retracement, then try to capture the higher low. So there, before ICT came around, it was really hard trying to know where the retracement will end. So I was jogging around just trying to gaze up, trying to do the Fibonacci 50%, the magic level 61.8. We've all been there, just trying to capture the higher low to continue with the following trend of the following leg of the market. But since ICT came around with the concepts, and how I understood them was it helped me in knowing the end of the retracement of the trend by looking at the arrays, which of the array has been rejected or price is respecting which array in regards to the current dealing range, and executing from there and targeting the next point of liquidity, for this case being the current high on this uptrend, which will be right here, targeting this current high and probably higher, or basing my executions on projection, basically the failure swing like we may see here, then targeting twice of it, going up, it being the targets, and so on, and many of the concepts that ICT has really shared. So ICT to me has been really a change, has been really a game changer on how I used to view the market. So how I usually execute, I execute basically on his concepts, and he has helped a lot in helping me understand the retracement and the ending of the retracement to be able to profit on the next leg. So to begin with this trend currently, or this leg basically, we have a current dealing range which detonates an uptrend coming from this swing low to this swing high here. So from we are on the daily time frame on this pair US 100. So once I mark my dealing range, I have my premium side here. I have my premium side and I have my discount side here. So from there, what do I do next? I go now and look for the arrays, the PD arrays on the premium or on the discount side. So for this case, I'll majorly concentrate on the discount arrays that are lying on the discount part of it, since I want the market to retrace on the discount side to be able to offer a better opportunity for a long position to go and profit ahead to target this high that's lying here. So on the higher time frame, on my case the daily time frame, that's what I usually look for. What is the bias, or basically the direction, the current strength direction that market is following. For this, the bias will be an uptrend, since we have an upper dealing range from the swing low to the swing high here. We comfortably closed above this swing high here, so making it my dealing range. So I'll want to proceed on this dealing range, moving on higher, or basically I want the uptrend to continue, and I love to have my entry being on the discount side of this dealing range. Once price comes and closes below the swing low here, then I'm no longer interested with the up move. So that being it, my business on the higher time frame is done. So now I go to my structure time frame, for this case, which will be my 1 hour, to see to target down this retracement, how it's coming down and how it's coming in regards to these arrays that I've plotted. So for this case, I have this fair value gap that's here, or a BC buy side imbalance, sell side inefficient, being that there is inefficiency in terms of sell side. So once the sell side comes and fills up this gap, I'll be looking now to enter on the other side of the market. Apart from that, we have order block from this to this, these two consecutive candles that are going down, and I'll basically measure on those two, or rather, and this, there's an IFG that's here. So once I plot this IFG here, you'll see them, they'll be all along just coming around, they'll be hovering around this fair value gap here. And now having this IFG around, we see how price is respecting it and doesn't want even to come below even the 50% of it. So in terms of the arrays, I may not maybe introduce them well, since I'm not the author of the arrays, as it is the author of the arrays. So I may introduce them wrongly, I may term them or maybe explain them wrongly, so you'll forgive me for that, because that won't be my error. But I'm just trying to state how I myself understand the arrays and how I usually execute on them. So we have this daily IFG and we see market is respecting it. So now by just marking them out, my business on the daily time frame is done. So from here I'll go down to 1H, which will be my structure time frame. So I usually view market in 3 phases. 1, the higher time frame offering me the bias, then 2, the structure time frame that's aligning with the bias, then 3, the execution time frame that comes after the structure time frame aligns with the bias time frame. To simplify that, I have my bias on the daily showing me bullish. I come to my structure time frame, I wait for the price action to match up with bullish, meaning I want to see higher highs and higher lows on the 1 time frame. So once the retracement comes down, I want to see this retracement down, a change in market structure shift, then look again for my arrays on this structure time frame where I can execute them from. On my entry time frame, that being the 1 minute or maybe the 5 minute, depending in which one aligns well with the arrays that I'm looking for. So coming now here, this is the retracement that you have seen from the daily coming down here, and we had a change in market direction right here. This low, higher low, lower high, sorry, is the last high that was present before market came and took out stop price that was on this swing low. We basically had a purge here, we purged liquidity here, and market rashly came and changed direction by closing above this candle. Now this candle comes again as an order block, and we have a breaker here that have delineated it here. So once we expand and we come now up here, now this again becomes my new dealing range. So I come again out of this, I'll just delete this daily dealing range to avoid. So I'll now come to this current dealing range on my structure time frame, since now it has started aligning with my bias from the higher time frame. And from that, I'll look again for price to retrace downwards to come and respect an array that I've identified on this structure time frame. Now I'll be monitoring this retracement on the lower time frame, or basically my entry time frame, now to ready myself on the entry of this trade moving forward. Once I see this array being respected here, like price was doing here, and we have a change in market direction right here after we respected this wick on this this discount week. Once he was respecting it here, we had a change in market direction. I love this gap here to be my IFG for price to continue going upside on it. So on my entry time frame, I've been looking for buying orders after price has closed here right down here on my lower time frame. So coming to this entry and how I entered it, again there's a recording on all these trades on my trade recap video that's uploaded, that will be linked at the end of this video. You can go and watch how I executed this trade. This one I didn't have to wait to have this dealing range for price to retrace lower again. That's why the target was shorter, because I entered it on the New York session, just targeting a quick scalp from the lower time frame. So once we had the structure shift again on the lower time frame, I went to see how I can benefit from this trade. And once the retracement was over, I executed my trade and I exited it right there. So the recording of this video, it's on the trade recap once again, as I have said. And on this conglomeration here, I was again on this retracement. I was taking some sell orders, some of them which were break even, some of them were losses, but those which are break even, I don't usually go ahead and include them on the trade recaps, because I'll rather have a longer video. So I concentrate more on having wins and losses on the trade recaps. If I go to the trade map and see on the executions, there's a conglomeration of trades executions right here. So like this one here will be a break-even trade. I didn't capture it. This trade here, which is this one here, I alienated it, I recorded it. You will see there will be another here. There will be this, actually I entered it twice. One yeah, ended up being a break-even trade here. I closed it right here because it wasn't yet ready to scale back up. I closed it for one reason or another. Then again here there are some losses here again, now up until now to the current trade that we are having right here. So basically that's how I usually approach the market. And I hope on this trade this basically weekly reflections, the video will be able, or will be better to explain my executions, how I usually execute on the market, and how I usually enter my trades and have my targets. So once you see on the trade recaps the video just capturing the executions, so just know that's the idea behind it, and I usually base my trade executions to in regards to this trade idea or trade analysis that I've just talked about it here. So that will be it for this weekly reflections for